SOFI and Robinhood investors, beware. Both of these stocks are priced at very interesting levels, and I'm going to be analyzing the technicals as well as the fundamentals of both of these stocks. And I'm going to be telling you which is a better buy and at what prices that I would personally be buying these stocks and where I see them headed for the next 6 to 12 months. So if you're an investor in either of these stocks or you're thinking about buying one or the other, this is a must-watch video. So first of all, SoFi, they recently had earnings and they added 850,000 new members, totaling 11.7 million in total members. And this is really amazing. This is really good stuff. And they actually introduced 1.26 million new products. So that brings in the total number of products of people using their products at 17.1 million people. This is specifically a very strong infrastructure play, and most fintechs, they really rent out their banking infrastructure, whereas SoFi completely owns it. So if you're thinking about purchasing a high quality stock, SoFi is trading for a good valuation overall. Let's go over here to SoFi. It's trading for $21 per share. The earnings were absolutely amazing. And what's interesting is there was a pretty big bounce. The stock went up to like 22 and a half, 20. It was trying to push $23 per share. We didn't quite get there, and that's completely okay. The numbers were amazing, but investors are saying, hey, we want to see even more good news come out. And I don't think that's going to be a problem. If you look at, what most fintech apps are doing, SoFi is, very different. So if you look at companies like Chime, Cash App, or even like Robinhood, they don't actually have a banking license or really any core infrastructure. They just partner with third parties that hold deposits, they issue loans, move money, handle compliance, and that costs those companies money. Whereas SoFi, they have really nice margins, and they're going to be continuing to increase their revenue, and a lot of that revenue is going to come down to the bottom line. So this means that they're always, their competitors or other companies are always paying fees, and they're really relying on someone else's system, and that really limits to how much they can scale. Of course, they can still scale, but they're going to have a little bit lower profit margins. And I'm telling you, Wall Street really cares about profit margins. So I think you're really making a mistake if you're overlooking SoFi right now, especially given that SoFi has sold off. I think some investors have lost some confidence. But look, zoom out. Let's look at the bigger picture here. SoFi has had absolutely massive growth. Year to date, stock is up 39%, and in the 1 year, it's up 229%. So if you zoom out, I know, some people get really impatient and they look at short-term performance and, they get antsy. They're like, I want returns. I want more returns now. Look, it's going to be all right. This stock is likely going to be a $30 stock. I've mentioned many times that the market cap is going to easily be $30 billion. And exactly as I said is what we're kind of getting here, right? So let me do my job. Let me do my analysis here. Just take my word for it because I haven't steered you the wrong direction in SoFi, Palantir, Tesla, or NVIDIA. I've been right on the dot with all four. So SoFi is urgently right now, their next few quarters are really benefiting from not relying on third parties, on really scaling their own business. So all these new members that just came in, I think really the market doesn't understand how good this really is. 850,000 new members coming in is going to be absolutely wild in terms of money that they're going to generate, because they do grow their lifetime value a lot by bringing in new members in the door. As long as that is cranking, I am very positive that future growth for SoFi is going to be very strong. Okay, that's the most important metric that I'm looking at. And if you look at why this is so urgent, because they're benefiting from interest rates going down. So they're benefiting right now from interest rates staying higher for longer because their bank charter lets them collect fatter margins on loans, while other fintechs are still paying rent to real banks. So that spread that is out there in terms of money that can be made, SoFi collects both sides. They completely take in deposits, lend out the money, versus other companies that have to use middlemen. So right now, SoFi is really the infrastructure play, similar to how I talk about NVIDIA, how NVIDIA was an infrastructure play and everyone got rich on NVIDIA. Well, the next opportunity to get rich is SoFi. So right now, SoFi's infrastructure edge is turning into really a land grab, because while other fintechs are, stuck waiting on partner banks to approve products, SoFi is launching faster, cheaper, and capturing more users while rates are, fairly high right now. They're likely to go down We're likely to get a rate cut this year. So SoFi is benefiting right now. So this is a great opportunity now. And we'll talk about Robinhood as well. But SoFi, I would easily be buying it for $20 per share. I think $20 per share is a no-brainer. And like what I did in Discord was I ended up just selling some $20 puts. So I told my whole community, I'm like, listen, easy money. I mean, we trade SoFi every single week. I'm always looking at my positions on my Monday and Wednesday calls, and I have like the best community actually in the world. Like we have a large community, and we're just making money. Like literally just a lot of money, just really profiting off of SoFi by just, selling puts to get in, covered calls, just generating income. And it's amazing. So much of an opportunity for investors. And I expect that to continue, especially right now with, the higher rates. SoFi is going to continue to benefit. And they just have a really unique competitive advantage. Competitive advantage that they have versus like other fintechs is that they don't rely on really anyone. They're self-sufficient. So most fintechs rely on a patchwork of like outside partners. So partners like banks or lending partners or third-party APIs for payment or compliance. And yeah, just a whole lot of reliance, where SoFi completely owns the full stack from like front end to back end. So yeah, it's very powerful, and SoFi, it makes them very different. So owning the entire financial stack makes them different from so many other companies out there. So like when I look at the technicals on SoFi, we're gonna go to the chart right now. You're gonna see that, yeah, obviously it's been very strong, and there has been a lot of buyers, especially when they had earnings. I told you guys, like I made a video, like watch out for July 29th. SoFi is going to have earnings, and like exactly as I said, we had an increase, and I didn't say we're going to increase to 30. I didn't say we're going to increase to 25. I said we're going to get a 10% increase, and like that's exactly like what we basically got. We went from like 21 to 22. So it was like a 5-ish% increase. So, I mean, that's amazing. And I was basically assuming like we're going to hit $23. Now, we couldn't maintain that level, and that's fine because look, there was still a lot of money that was made. Now it's pulled back slightly, like, in the short term. In the long term, can't even call it a pullback. So yeah, there was a lot of buyers, and then I guess, some investors took the opportunity to sell as well. So they took profit, and that's fine. Right? That's fine. We're not really concerned here. Like what I focus on is really long-term investing. When someone wants to work with me, we talk about like years. We don't talk about like days. We don't talk about like weeks. We talk about months and years. We talk about, where do we want to get to retire, and what kind of monthly income do we want to produce. It's not about day trading or weekly trading. It's not about that at all. Well, for me, I don't coach like that. So when I look at SoFi, it's a pretty clear trend, and the opportunity is still very much here to just literally purchase and do covered calls and generate a ton of income and just own an amazing, amazing business. Now, honestly, don't make the mistake of like thinking that the momentum is over. The momentum is far from over. It just seems in the short term, pretty normal. It's pretty healthy, honestly, for a stock to go up, come back down a little bit, and then, resume its upward momentum, right? So don't make the mistake. I'm telling you, beware right now. I have it in my title. I just need you to understand that a pause in momentum is not an end to the story. The story is very much alive. SoFi lends from its own balance sheet. They had the full margin capture. SoFi doesn't have to split profits with anyone. They don't have to split with the partner. Every loan it issues is literally 100% owned, so SoFi earns the full interest income. This is extremely unique as a company. No middleman. It's way faster, way cheaper, very smart, no partner delays, no API fees, and full control of user data. That last part is also extremely important. Full control of user data is basically like how these trillion-dollar companies get there, right? Like Palantir is on its way. Palantir had amazing earnings, and yeah, they just have so much data. Tesla, so much data. Amazon, massive amounts of data. So all of these companies have massive amounts of data. I studied analytics. Like I have 3 sort of degrees or 3 majors I had in college: finance, economics, data analytics. And I studied data analytics, and this was like, gosh, I'm getting older here, but this was many years ago. And I already saw the writing on the wall. Companies will be using data, and that will be their competitive advantage. So this was like obviously well before AI. I already had like a class. It was similar to like AI. It was like data analytics, predictive. It was called predictive analytics, right? But AI does a lot of like predictions, predicting in the code itself. So I already saw the writing on the wall, and SoFi is like that perfect archetype that I was looking for as an investment. Like if you ask me like what makes me different as an investor and why people join my Discord and why they trust me and why they get results, is because I look at the story. I'm trying to understand the archetype of the company and if it meets the criteria as a long-term investment. That's very similar to like what Warren Buffett and Charlie Munger were doing in their careers. So I did come from value investing because finance education, traditional financial education, right, in college teaches you more of the value investing. I had to teach myself more of the growth investing. I did not necessarily really like learn that in college, but I did learn a lot of that on the job when I was working on Wall Street. So what I realized when I saw SoFi is this is an amazing business to be invested in. And I honestly think that this is one of the best stocks that you can have your money in, which is why I cover SoFi so often, because I have massive belief in it. And the only regret I have is I didn't put more money into it. So right now, if you ask me, is SoFi a buy? I'm not a financial advisor. I'm not giving financial advice. You guys already know that. But straight up, I think it's still a good purchase. It's been a good purchase, and it's going to continue to be because they have amazing tech, agility. They basically operate like a tech company, but they have the bank power. So it's like a marriage between two amazing businesses, and they're just going to dominate. So like beware, this momentum is not over. Okay, let's go into Robinhood. Robinhood is also a stock that I do like a lot, and I'm like trying to think which one do I like better? Is it SoFi or Robinhood? And they both are very unique businesses. Of course, they're growing like crazy because they're so unique. SoFi or Robinhood? Well, let's kind of break it down. Of course, you can have both, right? Robinhood right now is in a very good bull trend. The stock has doubled, okay? This makes this investment like one of the most profitable investments that you could have made in 2025. So Robinhood has been making people like stupid rich, absolutely. Now the revenue for Robinhood that has recently like come out for their latest like earnings is $989 million. So, we know that Palantir just had $1 billion quarter in the video that I uploaded yesterday. And essentially Robinhood is pretty much right there as well, right? They're like about to hit $1 billion per quarter. And this is up 45% year over year, beating by a huge amount, the consensus, which was $915 to $920 million, right? A lot of this growth came from transaction-based revenue. So you guys that think Robinhood is free, no. Life's not free. No, there's nothing free in life, right? Like there's like a saying, the only free thing is like cheese in a mousetrap, right? So nothing's free. Robinhood makes tons of money in transaction-based revenue. So basically what that means is like when you're like placing trades and option trades, and I'll talk about the option revenue in a second. When you're placing trades, they're like using your order flow and they're selling it, right? So like if something's free, you are the product. Okay, so the transaction-based revenue surged 65% year over year to $539 million, led by equities, options, and crypto trading volume growth. So options specifically rose by like 46% to about $256 million, and that beat forecasts by a lot. So I guess part of that's my community. We're making money and we're trading a lot of options, and I guess Robinhood gets the benefit from that, right? I don't get sponsored by Robinhood, and I've never been sponsored really by anyone. As far as I can remember, it's been years since I've taken any sponsorship. So yeah, I just think it's a good platform. It's super easy to use, and that's why they're growing as well. Now, their funded accounts reached 26.5 million users, which grew 10% year over year, it's very good. Now, what Robinhood has going for them, and why I also think, beware, this stock is going to go higher. We're going to hit 110, we're going to hit 120. Do not make the mistake of taking profit just yet, is because they're just reaching more users. And those users are depositing more money. So if you've noticed, I actually got the notification the other day, Robinhood, like it said, if you add $55,000, we'll increase your gold APY, the average percentage yield, from 4% to 4.5%. I mean, I don't really care, nor do I really have any cash in my portfolio. I'm fully invested. But I can imagine some people would add money because they have a little bit higher like APY, like my parents would. They look for like really safe investments. like super, super safe stuff. So like that would be enticing to someone that is really in a lot of cash. So yeah, Robinhood Gold subscribers hit a record 3.5 million users. So guys, like Robinhood is absolutely cooking. Like this company is cooking. If I go to the summary right now, I want to show you like the key point that I'm really like looking at. The market cap was $93 billion. So we're really right there. We're like knocking on the door for 100. We're like, yo, boom, 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 boom. Like, let me get into the $100 billion area. Let me have a good time here with the 100 bill, and then let me take a look and set a plan for a $1 trillion valuation. Of course, we're going to be far from that. It's going to take a long time to get $1 trillion. It's going to take a very long time, but we'll be at 100 billion in no time, and then yeah, essentially we're going to be at a 120 billion as well, within 6 to 12 months. So if you ask me, this is a great opportunity to invest in a high growth company, and they just like launched 24/7 customer support. I think that's been like a really big issue for people, is for myself included. I think this is a long time ago now. I was traveling, maybe it was in Colombia or something, and I got locked out of my Robinhood. And yeah, I was like, of course, I was freaking out. Like that's like my livelihood. First of all, for coaching, and second of all, like it was over $1 million of money that I used to like lifestyle, right? Like I take out money. So I couldn't really contact their support. Now that's like, not an issue. They have 24/7 support. So this really moves the target to really like a global player. Like this moves Robinhood from like, a niche like brokerage to everyone is going to be using Robinhood because of the ease of use. And as you guys know, if you've been watching or subscribed recently, we got a lot of new subscribers, so thanks for that. But also benefits you as well to subscribe. You get access to my videos right away, and oftentimes my videos literally print ton of money for you because the information that I give out is like the most well-researched information that actually gets results. So like what I said about Robinhood was that they're expanding. They're expanding in the US, they're expanding in Europe. So as they expand, like for example, US, they have futures trading now. In Europe, they're just entering more countries. This expansion is super important if you're an investor because you don't want to miss out on the expansion boost. The expansion boost is going to make investors a lot of money, and it's just essentially Robinhood reaching new markets. So it's a mistake to not be invested in the stock that's expanding geographically, and they just have so much tailwind right now. It's a low-risk financial model. So unlike SOFI, so let me talk a little crap about SOFI. And again, it's not of course I love SOFI, but the benefit that Robinhood has specifically is if we had like a 2008 crash, Robinhood would fare a lot better than SoFi because Robinhood doesn't carry credit risk. They don't have like a whole lot of they don't have any bonds in their balance sheet. They don't have like loan charge-offs, or like they're not going to like default on debt, right? So there is a huge benefit in case we do get a crash, then Robinhood is going to fare better. So my opinion right now is that both companies have about 20% upside in the next 6 to 12 months. So I'd personally say they're both good, and don't make the mistake of selling and taking profit just yet.